Yes, yes, yes. Hey guys, Gerald Peters. Most of you probably know me, obviously. Some of these videos I may use is to share with other people to kind of show them what we're doing here in the Money Flow Trading Society, or what we've been hashtagging the Money Flow Gang, right? So, money, help if I could write, right? Money Flow Gang. So feel free to tag that. If you hit some trades, tag it. It really does help us to have other people in our trade group, in our thing, and not in some weird sense that maybe we could move some stocks, although that would be kind of cool. It's trading as a community, as a group, as a team is you can get a lot of encouragement from that, and it's a lot of fun to know that somebody you really don't know who lives in Oklahoma or in South Dakota or New York or California is in on this same trade and sharing your same pain. And so all of you have my book, The Money Flow Trading System. Obviously, if you're watching this video, or if you don't, get with me to get it. Some of the other books I've written, this is always free to anybody that's in the society. I do charge for a physical copy just because I got to send it, obviously. The beers, if you're a member, beer's free for life. I wish. So I'm trying to do more of these videos. I've been trading for 21 years. I'm not claiming to be the best. I'm not trying to be an expert. But one thing I am is super patient, and one thing I do know is the money flow strategy. I feel like this is a little sideways. Let's see if we can't fix this a little bit. Now, these are just, me trying to help you here, riffing. Let's talk about portfolio management. In the letter that I sent out today, in today's training article, I show the stock NIO. If you go and look at NIO, now I'm in all disclosure, I'm not in this stock, but I'm in very similar stocks. Go look at Square, SQ. Go look at any number of stocks that have just gone to the stratosphere. In the lesson today, I talked about this idea, and I consider it part of portfolio management. And it's this idea of staying with the same stocks. So, and the reason I figured this out is I would put together a trading strategy, and I would take a trade in like Twitter. I lose money. Shit. I would then move all that money, and I would take a trade in this one. And then I'd take it out, and I'd move over here. And I would run filters and RSI scans, and I would just hop from stock to stock to stock to stock to stock, often seeming like I was catching the losers. Well, then I would go back and I would look. And this happened with me on Tesla. I went back and looked. And on a Tesla chart, my system had 2 losses in a row. I lost, and then I just quit following it, and I was off to something else. And then I went and looked, and it went from, me trying to buy a breakout, and then it went down. And then I tried to buy a breakout, and then it went down. And then it stopped, did a breakout, and then it ran for $140. My strategy worked. I wasn't there. Because of a loser and a loser, I wasn't here for the big winner. So one of the things that I began to do, and some of you are going to see this, you're like, oh, it's breaking support. We need to sell the stock. Maybe. Maybe not. What is the quality of the company? What is the true value of the company? What is the asset that we're trading? So I can't stress to you enough to read. Take your free time and read on the companies that you're trading. And we're not day trading. I'm not a day trader. I'm not going to be a day trader. That's not what I do. I position trade. I'm trying to make 50 to 100% returns. I don't give a shit about 6% or 5% or, oh, it had a big pop and so we sold it. There were a bunch of us today, like in Roku, people sold the stock. Guys, that's not what this book tells you to do. And the reason you paid to join, to come in with me, is to let me help you trade. So you've paid money, you've come into the trade group, and then you don't listen to me and don't follow the group. Now, some of you are going to do your own thing. I'm not saying that. But if you're new and you're trying to learn, your goal is to learn. Learn. Like, don't fight me. Learn. Like, take my 21 years. Put it in your brain. Your goal is not to make money next week. Your goal is not to, I made $8. That's not your goal. I know you think that's your goal. That's not your goal. You know what your goal is? Perfect trades. This is your goal. executing perfect trades. Executing perfect trades, not making money. A perfect trade could be a losing trade. You follow the system. So we could take ANIP. It lost some money. Okay. Well, the same day we bought that, we bought ARVN. It went up. So the difference between the two, the loss isn't that bad. Oh, in the meantime, Roku went up 35% or whatever in the last week, right? So we have to be in a position where we're trading all these different trades because nobody knows which stock is going to be the one that goes up. Nobody knows where the market's going to be tomorrow. Nobody knows. Anybody trying to tell you they know is full of shit. Those are liars. If you think there's people who know, you're as dumb as they are. It is not possible. Nobody knows. What we're playing is a strategy that when price goes up, it tends to keep going up until it stops. We're trading a pattern that price moves in 4 stages. That is the single most important thing, is what stage is this stock in, right? Now, if a stock starts to break down, one of the things that you'll see me do is often I'll just sell half. And I see in our chat room all the time, are we still in this? Are we still in this? Are we still in this? So only thing I consume is you're not actually paying attention to me. Or I'm not doing a very good job of putting the information out, one or the other. Either you're messing up or I'm messing up. And if I'm messing up, tell me. But I haven't told you we're selling it. Why would I sell it? I'm not going to secretly put you in a stock and then secretly sell it and then not tell you. Like, there's a reason that I haven't sold it, right? So some of that is, if we were being honest, you're just not paying attention. Like, you're not watching every day. Maybe you are. Maybe you are. Maybe it's me. Maybe it's me. And I'm learning this stuff too, so I'm practicing. And I mess up all the time. So, like, if I get on to, like, if you do and I say something, that's just me trying to help you. That's my job. Like, I'm here to coach you. That's kind of what you paid for when you came in. When you bought this book, you paid me to yell at you when you don't follow it, okay? Or if you see me deviating from it, say, hey, why are we deviating from it? Because listen, 21 years of trading isn't going to fit in one book. This is one part of the strategy. That's one little part of a big strategy, okay? I also put trade options. I also short the market. I also buy inverse things. I also buy puts. I do all kinds of things that most people, if I dumped all of that on you, you can't handle it. So if we're talking portfolio management, and here's where we're going to get complicated. I follow 70 stocks every day that I look to swing trade. 70 stocks. I don't run RSI scans. I don't have shit automated telling me when to buy something or sell something. I physically do the work. I pull up the charts and I look. And when you do this every single day, guess what happens? You learn charts and you learn where the stocks are and you learn what the patterns look like and you know what a breakout looks like because you've seen a breakout 10,000 times. You've seen a stage 1 consolidation 10,000 times. You've seen a failed breakout 10,000 times. You understand what it means when the market opens down, often turns and recovers because it's in a bull market, and you don't let yourself get stopped out just because the stop broke support when the market's in a bull market. So if you have the market above the 20-day moving average, that's bullish. You don't let yourself get stopped out at the open. But this is experience, and you may or may not have that. What you're coming to me is I'm trying to impart to you experience, things that I've learned, so you don't have to spend 7-10 years losing $70,000 learning that. Okay, so you'll notice I don't do a lot of stuff in the morning. Most of my stuff is later in the day. Not always, but a lot of times it's later in the day unless I get the feeling that we're not going to get another chance. Okay, if you have small money, let's say you're trading $10,000 or less, $10,000 or less. I think I would skip stocks like AT&T. Go look. If the stock goes up and it's going to go up $5 in the next 2 months, you're going to be tying up money to make a $5 per share return. And if you're only buying 25 shares times $5, do the math there. What is that? You know, you're going to make $125 for tying up your money for 2 months. That's not the stock to trade. Now, you're like me and you're trading $500,000. Well, I could buy 500 shares and make $1,000 and collect the dividend. You're not going to get any dividend on $25. So we need to use some common sense. So you want to buy the ones that are going to move, or at least appear to have some movement. So if I had small, now, saying that, you could use those stocks to learn, for sure, 100%. You could buy T, you could buy Pfizer, you could buy Merck, right? You could buy these stocks, but this is not going to go up 30%. AT&T is not going to go up 30% anytime soon. This is going to take months to a year. It'll take a year what AXGN did in one day. In one day, it's going to take AT&T a year. You see what I'm saying? So while you're playing with this, you're missing out on trading experience of these other stocks, or an Ulta, or a Roku, you know what I'm saying? Like all these different, these are high flyers, high movers. These are investing stocks. Merck, Pfizer, they pay dividends. But when you're trading a $10,000 account, dividends isn't what we're talking about here. We're talking about trading, churning money. So you want to flip low-cost houses, or you want to flip houses that can pay you a lot of money? So we got to get it clear in your mind. If you're doing portfolio management, you got to get clear in your mind. What are you trading? Are you trying to be an investor slash, and a lot of people get it caught up. They're trying to trade like they're an investor, and they're trying to invest like they're a trader. Because they'll go, hey, this isn't my buy and hold. What do you think I should do? It's going down. It's in your buy and hold. You hold it, and you buy more. You just said that. Buy and hold. That is the definition of buy and hold, is you buy it and hold it, right? But if all of a sudden you get hit to this trading game, right? You read this and go, well, shit, I don't want it to go down. Well, guess what? You've decided to go from being a landlord collecting rent, right? All of a sudden you were a landlord, and then you watch television one day and you see a guy flips a house and makes 30 grand. You're like, well, shit, I'm collecting $300 a month. This dude just flipped a house and made 20 grand. I think I'll do that. Two different businesses, two different skill sets, two different ways of managing a portfolio. These are not the same game. Does that make sense? So you have to decide real clear right now. Are you investing? Because if you're investing, get that out of your trading. If you're trading, get that out of your investing. Make very clear distinctions. Now, you could do it inside of the same account. I had a hard time doing that. I had to separate it. I will go weeks and not log into my buy and hold. I don't even pay attention that they're going down until they get in extreme levels to where I can then add to it. I'm not paying attention to me. The whole concept is buy and hold, right? So, but in my trading, I'm looking at that 5-10 times a day sometimes. 5-10 times a day. So get real clear. Are you trading or investing? If you're trading, then be a good damn trader. If you're investing, then be a good damn investor. If you're doing both, then separate them. Put on the hat, there's the mom hat and there's the boss hat, right? If you were your boss of your kids at work, they need to treat you like the boss. At home, they can treat you like mom, right? Or dad. Get real clear on that. Real clear. I'm telling you, if you do that, it'll help your trading. So portfolio management. I trade like a hedge fund. I am not a day trader. So here's what I'm trying to do. I want to have 20 to 40 trades. And you're going to say, well, I don't have enough money to do that. I know. I've been doing it 21 years. You're not going to beat me overnight. So for you, that may start out like this. 10 to 12 trades. Maybe it's 5 to 10. The smaller this number goes, the more bored you're going to be, the more stupid shit you're going to do, the more dumb YouTube videos you're going to watch. Most of you spend more time looking at other things than you do studying this strategy. I know you do. I know. I've been down the rabbit hole because you're still asking me questions about it, but you have time to spend hours watching other people. So if you would master this, you don't need to see what other people are doing. Like, you need to take a moment and learn. I'm telling you, the best thing I could do to help you, if you would take a moment and just focus on the 4 stages of price movement, price in relation to the 20-day moving average. Where are the 5-day, the 10-day? How does the MACD work? How does the histogram work? Where are the support and resistance levels? What is true value? And do that around 10 to 20, or 20 to 40, or 5 to 10, whatever your balance is of stocks. I'm very comfortable. Right now I have 44 open trades. Doesn't stress me a bit. On half of these, there's nothing to do. They're all in an uptrend going above the 20. There's nothing for me to do. So that narrows the window down, right? And as I start going down my charts, because I follow the same ones every day, I follow 70, and out of those 70, I'm in 44 trades. So I'm first scanning these. Are there any new trades that I need to put on? I'm comfortable having 170 trades if it worked that way. It rarely does. So as I'm scaling out of the ones that are doing well, what am I doing? I'm looking at putting some in one of these 70 that are part of these 44. So there's only 30 that I'm currently not in, right? And there could be reasons I don't want to get in them. Maybe I skip on a biotech that I follow because I'm in 5 other biotechs. So part of portfolio management is looking at what you have. If you have 10 to 12 stocks and every single one of them are tech stocks, you're a shitty portfolio manager. Just being real with you. You're out of whack, man. And you're setting yourself up for a failure. The moment tech gets smashed, all of your stocks are going to go down. So have you noticed today, like today, a lot of you guys were in the red. I was in the red, but I had some big winners. TMF was up nice, right? What else was up nice? Square was up nice. Walmart was up nice. I'm in that, right? Roku was the big standout. I'm in Roku, right? So I'm in all these. Yeah, I had some losers, but I had a bunch of winners. So I wasn't down much on the day. Tomorrow I'm betting on a big up day. What did I do? I added to Uber. That's a different business than Roku, right? I added to Pfizer, different business than Roku, different sector. I added to Uber, AT&T, different business, right? It's not tech, it's communications. So I want all these different stocks. So I follow 70 trade stocks, and if you email me, I'll send you what those are. I also follow 100 of the top dividend stocks in the country. They're called bellwethers. Morningstar rates them. About 30 of those I own in my buy and hold portfolio. Why? I'm seeking expert advice. If you wanted to buy a car, you'd go to Kelley Blue Book, right? So when I want to buy a stock, I go to experts, people with degrees who went to Wharton and Harvard and Princeton and Yale, and they have degrees in finance, and I want to see what they say. And then I take what they say and I put it over this trading strategy, and I look for a way to buy stocks. It just gives me rules. It's not that it's right or wrong, it just gives structure. So you're buying in a consistent way. And so as you do that over time, you're going to have the Roku breaking out, and you're going to have the ANIP breaking down, right? And so I closed that out for what, a 15-20% loss, but Roku was up 15% today. Oh, and so was Square, and so was TMF, and so was Walmart. You see what I'm saying? And so it's this process of managing these 44 stocks. So for you, that may be 10 or 12. They shouldn't all be in the same sector. They should be in different sectors. And you say, well, I don't know anything else. Well, read, study. That's your homework. Push yourself outside your comfort zone. And it could be 10. Now, let's say you don't follow them all. Let's say you can't buy all those stocks. You could paper trade them. Every platform out there has. So every text that I send you, you could put into a paper trade. If you actually gave a shit and wanted to learn and wanted to trade with me and actually wanted to get off your butt and actually do what it is I do, and what you paid to learn, if you actually were serious about that, really wanted to do it, you could either write these down manually, or you could, E-Trade offers paper trade. Almost all the platforms have paper trade. And every time I send a text, whenever you get a break at work or at home that night, whatever, you go over there and you put in those trades. And you follow along and you pretend like you care. And you spend some time on this and you learn. But here's what happens. I'm telling you, I've been with a lot of people in a lot of different trade groups. They kind of half-ass pay attention, and then they're looking at this one, and they're looking at this one, and they're looking at this one, and all that time they've been playing around over here, they could have been doing the work over here and learning something. Like, okay, because I'm telling you, I know what I'm doing. And if you did this right now is up, I don't know, 30, 34, 35% last quarter. I don't know what it is this right now, 4 or 5% maybe. But that looks like work, what I just said. It's up to you. Or you could just half play attention. Maybe you're a better trader than me. I don't know. If you are, you can go that path too. But if you were to take the 3 months that you paid to be in the Money Flow Trading Society, or the 1 year, and actually devote time to it, like it's super important, like you cut your own finger off if you didn't actually participate, like there is no days where you don't, it becomes an actual priority in your life to learning this. If you did that, I promise you at the end of 12 months, you're gonna be a badass trader, totally self-sufficient. You'll only be trading with me because you're helping me out by showing me stock picks, and me and you are just friends. That's how that plays out. If you start learning this stuff called portfolio management,